Carolina joining us once again today is a trader who shared two charts last month that pointed to a market sell-off. But before we check back in on at least one of those charts, let's go cross-asset class before bringing in Joe Perry of ForexAnalytix. Because when we take a look at the various asset classes over the last month, wow, it is risk off. Take a look at the S&P 500 down 5.9%, on pace for its worst month since August of 2015. That, of course, was that deep selling action on Black Monday in China. The material sector really getting hit, down 13%. A correction in less than a month. Crude oil also lower. That's another silo of the risk assets. So confirming the idea that investors, traders are shunning risk, going towards safety. But interestingly, the 10-year yield up 12 basis points. That tells us, of course, that haven bonds are selling off. That doesn't confirm it, but one of the points of pain for the risk assets, rising risk or rising rates, really perhaps repricing risk and the cost of money, a reason that we have such a risk-off period. In fact, if we hop into the Bloomberg and take a look at what is happening for the S&P 500 on a monthly basis, this is a longer-term chart of the S&P 500. These are monthly bars, the green bars up month, the red bars down month. Over the last, and actually this is not the chart that we were looking for, so we will bring in Joe Perry right now, but that monthly chart of the S&P 500, it does show bearish action, again, the worst month since 2015, plus an uptrend break. So, Joe, you last month showed a really interesting chart to us, which suggested that we could see the kind of selling action that we have had since you last joined. So let's take another look at that chart and, dig in on your thoughts.
Yeah, sure. Let's first talk about why we came off so much. I mean, in the macroeconomy, first of all, interest rates. Everybody's wondering what's going on with interest rates. Are they going to go higher? Are they going to halt right here? China, we've been talking for a while now. Are they going to have an effect on the economy? Are they not? And now we have earnings. And now people are starting to talk about midterm elections. So all this together is starting to cause a break.
It is. And this chart is not only pretty, but it's also what I call a chart that works. Because when you were last here, that yellow uptrend was holding, but now the sellers are taking control.
Yes. So we were looking for that to break as the RSI was diverging from it. We came off, we were looking for 2,800 to the 200-day moving average. There's also horizontal support down there. We came down into that triangle, and now it's forming a triangle, but it may bid back up to create maybe a flag pattern. We're not sure, as we're in the process right now of forming that. We're looking at maybe 2,800, 2,850.
As some sort of a relief bounce.
Yes, exactly. And then possibly to break down from there. If you take the pole from the flag or the pennant and you add that to the end of we're expecting it to break down from, that comes in around 2,500.
Yeah, we've been taking a look at a similar chart quite a bit, and it's a pretty drastic target for sure. So you would be a seller of the S&P 500 E-mini futures, although with the understanding that there could be a little bit of a relief rally.
Yes, definitely.
And then supporting that cross-asset class, we take a look. So the last time you looked at the yen, suggesting that because it could go higher, we could see stocks go lower. But this is the New Zealand dollar, riskier currency pair. So you think this is going to go down? Right.
Well, stocks and dollar move inversely here. So if stocks are going to go lower, the dollar is going to go higher, which means the Kiwi is going to go lower. So look where we are right now. We've been in this channel now since the beginning of the year, and we're up at the top of the channel. There's a 48-day exponential moving average that we have right there. And we have some, there's actually a 0.618 retracement level from the previous low to high. So all those combined, all those resistance levels really make it seem like we're going to head lower.
Joe Perry, ForexAnalytix. You have a bearish view still, but you were correct a month ago. So look forward to having you back in November. Thank you for joining us. Caroline and Scarlett, back to you. All right, thank you so much.